Is the artificial intelligence story shifting from silicon to cement? While investors have spent years focused on chips, this week the narrative took a hard turn toward the power grid, with reports circulating that the AI build-out will require trillions of dollars in infrastructure. A major bottleneck has emerged that could dictate the speed of future growth. Plus, a key supplier in South Korea is reportedly on the verge of a manufacturing breakthrough that could ease supply constraints for Nvidia's next-generation platforms. Welcome to TickerWatch News for Nvidia, Week 4 of 2026. This episode covers the latest news, developments, and market analysis surrounding the world's leading AI chipmaker. While specific weekly trading data for this current week is still developing, the broader context for Nvidia's performance has come into sharper focus. Over the course of 2025, the stock posted a gain of roughly 39%, a solid performance, though it trailed the explosive 77% rise seen by rival advanced micro devices during the same period. Valuation metrics have seen a significant shift. According to analysis from Zacks Investment Research, the price-to-sales ratio for Nvidia has retreated from highs of around 200 times sales in 2023 to approximately 24 times sales recently. This compression occurs even as the company's fundamentals strengthen, suggesting the stock is becoming attractive to a wider range of institutional investors focused on valuation. The headline story this week comes from the World Economic Forum in Davos, where the conversation revolved around the massive energy and infrastructure requirements for AI. Nvidia CEO Jensen Huang, speaking with BlackRock CEO Larry Fink, stated that despite the hundreds of billions already spent by big tech, the industry is looking at trillions of dollars in future spending. This is being termed the largest infrastructure build-out in history. The focus has moved beyond just the chips to the pipes and power needed to run them. Goldman Sachs research indicates that global power usage by data centers is expected to jump from 55 gigawatts to 84 gigawatts in the next 2 years. However, backlogs for heavy machinery and grid connections are creating delays, prompting leaders to look at alternatives like nuclear energy. In critical supply chain news, Reuters and Bloomberg report that Samsung Electronics is preparing to start production of next-generation high-bandwidth memory chips known as HBM4 as early as next month. Sources indicate Samsung has passed qualification tests and is nearing final certification to supply these chips to Nvidia. This is significant because Nvidia has previously relied heavily on SK Hynix for these advanced memory components. The new HBM4 chips are intended to be paired with Nvidia's upcoming Vera Rubin platform, which is reportedly already in full production. There is a major development regarding the Chinese market. Reports indicate Nvidia has received approval to sell its H20 AI chips in China following a deal with the U.S. government. The terms of this agreement are unique. Nvidia will reportedly pay 15% of total revenues from H20 sales in China to the U.S. government. While this revenue-sharing arrangement may impact margins, it reopens the door to one of the largest AI markets in the world. Nvidia continues to widen its ecosystem through strategic moves. The company's venture arm, NVentures, participated in a Series E funding round for Synthesia, a British AI video startup now valued at $4 billion. Additionally, crypto miner Bitfarms is pivoting its strategy to focus on high-performance computing, planning to develop data centers specifically designed to support Nvidia's Vera Rubin GPUs. Wall Street remains largely bullish. Zacks has maintained a strong buy rank on the stock, citing the company's transition from a gaming pioneer to the bedrock of the AI revolution. Analysts have largely dismissed bubble fears, pointing to rising spot prices for GPUs and the difficulty companies still face in renting compute capacity. Financial institutions are revising their estimates for industry spending upward. Goldman Sachs research now cites a consensus estimate of $527 billion for hyperscaler capital expenditures in 2026, a figure that has been revised up repeatedly. There is also a notable shift in how this build-out is being funded. Tech companies are increasingly turning to the bond market, selling nearly $109 billion in bonds in the fourth quarter of 2025 alone. This suggests the build-out is transitioning from a trend in gadgets to a massive debt-financed industrial cycle.
Fundamentally, the company remains a powerhouse. Third-quarter revenue for fiscal year 2026 was reported at $57 billion, up 62% year-over-year, with data center revenue accounting for $51.2 billion of that total. Gross margins remain healthy at over 73%. The narrative is evolving from pure model excitement to practical application and infrastructure bottlenecks. CEO Jensen Huang describes AI as a five-layer cake, arguing that economic benefit will ultimately come from the application layer. However, the immediate constraint is power availability. Grid operators in places like Texas are drastically raising their load projections, and the time to power for new data centers has extended by years. This physical reality is now a primary factor in the long-term growth story. The most critical catalyst to watch in the immediate future is earnings reports from the major hyperscalers, Amazon, Google, Meta, and Microsoft, expected later in January. These reports will confirm whether projected increases in AI capital expenditures are materializing. Analysts at HSBC have noted that while demand is strong, cloud capacity constraints remain a hurdle. Keep a close watch on Samsung and SK Hynix, as both are set to announce earnings this Thursday. Investors will be listening for official confirmation regarding HBM4 orders and production timelines, which will directly impact Nvidia's ability to ship its next-generation Rubin platform. Finally, monitor any regulatory or policy news regarding the U.S. power grid. With the administration pushing for a nuclear renaissance and accelerated infrastructure development to support AI, any concrete policy shifts could alleviate the power bottlenecks currently threatening the sector's pace of growth. To recap the key developments for Nvidia this week: infrastructure focus. The conversation has shifted to the trillions of dollars needed for energy and physical infrastructure to support AI, with power availability becoming the main bottleneck. Supply chain expansion. Samsung is reportedly entering the supply chain for HBM4 chips next month, potentially easing memory shortages for Nvidia's next-generation platforms. China market. A new agreement allows the sale of H20 chips in China, subject to a 15% revenue share with the U.S. government. Earnings watch. The upcoming earnings from major tech giants will be the litmus test for sustained AI spending in 2026. That wraps up this week's update on Nvidia. Thank you for listening to TickerWatch News. Please remember that this podcast is for educational purposes only and does not constitute financial advice. If you found this episode helpful, please consider subscribing and leaving a review. It helps others find the show. Until next week.